Hi, this is Lara at Elliott Wave Stock Market with your weekly US oil analysis done on Tuesday 7th of May. I'm recording this video now 20 past 8 in the evening New York time on Tuesday the 7th New York time. At the daily chart level my wave count remains mostly the same. We got some more upwards movement. The last 2 days have seen slightly lower movement, and I expect, well, I'm a bit more confident this week that the upwards movement is over. It subdivides very nicely, cleanly and obviously now as a three-wave zigzag structure with a 5 up for the A wave, a 3 down for B, and a 5 up for the C wave. Minuet wave 4 has not moved beyond the end of 2, so this leading expanding diagonal remains a viable structure. Movement above 97.73 would invalidate the wave count. The wave structure actually for this leading diagonal has a better look now. The fourth wave is more obviously a completed zigzag, and it's taken a bit longer, which means that the trend lines for the expanding diagonal are now expanding, so it all has a really typical look. Also, when we use Elliott's channeling technique around this upward zigzag to draw a trend channel from the start of the zigzag to the end of the B wave within it, with a parallel copy placed on the high of the A wave, it perfectly shows us where price is continuing to find support and resistance. Price has found resistance at the upper edge of the channel and has bounced off. When we have a full daily candlestick on the daily chart below this channel and not touching the lower trend line, probably in a few days, at that stage I will have more confidence in this target. This is a leading diagonal in a first wave position. The fifth wave of a leading diagonal may not be truncated, so price must make a new low below 85.64. The diagonal is expanding because the third wave is longer than the first and the fourth wave is longer than the second. So that means the fifth wave should be at least as long as the third, if not longer. That would take price to 85.05 or quite likely below. The fifth wave should fall short of the 1-3 trend line. Let's have a look at what happened on the hourly chart. We're going to look at the end of the C wave within the zigzag with the start of subminuet wave C down here. Is this point down here? This channel on the hourly chart is exactly the same as that drawn on the daily chart. The C wave very slightly overshot it before prices come back into the channel. That's a really typical look for a C wave. So I have more confidence now that this upwards movement is finally over. We should see this channel breached first on the hourly chart, maybe in another couple of days. By the time I do the next week's analysis for you, we should have trend channel confirmation that the fourth wave zigzag is over and the fifth wave is underway. But until we have that confirmation, I will allow for the, albeit slim, outlying possibility that we could see a bit more upwards movement for this zigzag, and I will leave the invalidation point for the hourly chart at the same place as the daily for that reason. When we have trend channel confirmation, I'll move the invalidation point here and have more confidence that we're going to see new lows, probably to 85.05 or below. That big zigzag for the fourth wave correction is now very clear and obvious on the daily chart, but I still want to see this new trend channel very clearly breached before I have confidence we're in a next wave down to make a new low. That's all for me today with your oil analysis, and I hope that everybody had a great week.